Hello, my name is Nelly, and today is a very special video, a very long one. Today we are talking about crypto tax laws in Australia, and everything you need to know will be in this video, from understanding how the ATO sees cryptos, to filing with Koinly, to filing on the official Australian government website, how to get deductions, anything and everything in between. This video, I want it to be the comprehensive guide to Australian crypto laws and taxes. So without further ado, let's jump into it. I might have different clothing in different sections of the video because this video is probably going to take me days, if not weeks, to make, so don't be alarmed by that. If you enjoyed this type of content, please consider dropping a like. This took us a lot of time, and subscribe if you want to see more content like this. But yeah, let's jump into it. Okay, so this is the article I will be following. I will leave a link down below. This is on the official Koinly website. Just a brief little introduction here. Cryptocurrency transactions attract both capital gains taxes and income taxes in Australia. The ATO has set out clear guidelines on how crypto buying, selling, and mining is taxed. This guide breaks down everything you need to know about crypto taxes and how to avoid notices, audits, and penalties later on. We'll also discuss how to calculate your crypto taxes, the forms you need, and tips on how to reduce your Australian tax bill. Just a quick little note here, this guide, this actual written guide, will try to be updated regularly. Unfortunately, the way videos work is, you might see this video a year from now. Crypto laws are constantly changing. It might be outdated, but we'll try our best to update this article. So a few different updates that are probably of your interest. ATO warns 350,000 investors and traders to disclose or face penalties. This was in June 2022 or 2020. So keep in mind that governments are starting to crack down on people not paying their crypto taxes. So yeah, let's keep going. So yes, cryptocurrency is taxed in Australia. In Australia, crypto is viewed as an asset and attracts capital gains and income tax. With the ATO announcing that it's specifically targeting cryptocurrency traders, it's essential that you understand tax consequences of your crypto trading. If you bought or sold crypto in the last financial year, you will need to declare your crypto totals on your income tax return. For starters, a fair question you might have is, will the ATO know about your crypto? The answer is yes. If you have an account with the Australian Cryptocurrency Designated Service Providers, DSPs, then it's likely that the ATO already has your data. In April 2019, the ATO announced their data sharing program with all Australian exchanges. As a result, the ATO has crypto transactions data all the way back from 2014. The ATO also has your know your customer information you provided when opening your account with an Australian digital currency exchange. That might be an address, that might be a photo of you, and that kind of stuff. So in 2020, 350,000 Australian crypto investors were treated with a letter from the ATO warning them that crypto was indeed taxable, and the failure to declare could result in penalties for tax evasion. In this instance, recipients were given 28 days to disclose their crypto trades, and this is kind of what the letter looked like. In more recent news, May 28th, 2021, the ATO issued a reminder to Australian crypto users to report all gains on their tax returns. Approximately 100,000 taxpayers will receive a warning letter outlining their obligations and asking them to review their previously lodged returns. Further, 300,000 people are expected to be prompted as they lodge their 2021 tax return. So this is not to scare you. This is just giving you information on what's happening. If you want to ignore this, that's on you. But this is well known now that they're coming after people that are not paying their crypto taxes. So failure to declare crypto gains can attract a penalty of 75% of the outstanding tax liability, plus the tax itself and the interest on the shortfall. If you want to look into it yourself, you can also click here to read the actual official press release from the ATO, which will be included in this article. So as I said, this is a comprehensive guide. Everything will be explained. So if you already know this stuff, that's okay. You can skip forward. Let's talk about capital gains tax rates. So if you're trading crypto as an individual, an investor, the percentage you'll pay on capital gains tax is the same as your income rate for the year. Your income rate depends on your total income during the tax year. Individual investors benefit from a 50% discount on the tax if the crypto is held for at least 12 months. So that is the first massive tip I don't know, put this in bold, put this somewhere. So if you're holding on for longer than a year, you receive a massive 50% discount. And here is a little chart explaining the different tax brackets. So this is obviously from the ATO official website. Okay, the first most important step in determining how this process will work for you is determining whether you're a trader or an investor. So the Australian government does not see Bitcoin or cryptos as money nor foreign currency. Instead, the ATO classes crypto as property and as an asset for capital gains purposes. Crypto can also be viewed and taxed as income if you're mining, for example. How your tax depends on your intentions and setup. So the first question you have to ask yourself is, are you a trader or are you a investor? The ATO views participants in crypto markets as either a trader or investor for tax purposes. So a definition of an investor is just that, investing in future return. An investor buys and sells cryptos as personal investment stock. In this case, profit will be derived from long-term capital gains, typically as well as from airdrops, forks, and staking. Most Australian crypto users today will be considered investors, and their cryptocurrency transactions will be subject to capital gains tax. So buying crypto for yourself, mines crypto as a hobby, although this can be a little bit tricky, we'll talk about that a bit later, casually trades crypto. And now let's talk about what a trader is. A trader will typically buy and sell crypto in a matter of hours or days with the intention to profit from short-term price fluctuations. So potentially someone that does not benefit from the 50% discount we talked about earlier. A trader is active in crypto as a means to generate or earn an income. Here, gains are seen as a business income and not as investment profits. So commercial crypto mining, professional crypto trading, forges crypto as business, operation of cryptocurrency related businesses, and business related cryptocurrency transactions. If you are unsure about which one of these you are, because it can be a fuzzy area for some of them, here is an article, which once again you can find through the description, that will kind of break down a little bit more each of these categories and which one you would fall into. You should also keep in mind that the ATO may decide to tax you as a business depending on your mining activities. In order to determine whether you are mining crypto as a business, check out this section of the ATO's website. So I will also leave, everything is down below. I don't even want to keep saying it. Everything is down below. Any article that's mentioned, any link that's mentioned will be down below. Okay, now let's break down capital gains tax, income tax, and tax-free events. There's going to be a lot of different information here. So capital gains tax, CGT, is currently charged at the same rate as your personal income tax. As we said earlier, you'll pay 50% less if you hold for a year of your purchase, so that's very important to keep in mind. The following crypto activities attract capital gains tax in Australia when undertaken by individual investors, most crypto users. So exchanging crypto for fiat, exchanging crypto for crypto, buying goods and services, gifting and donating crypto, receiving crypto as gift, stablecoin trades, margin trading, ICOs, IEOs, forks, chain splits for investment purposes, mining, and forging crypto as a hobby. Okay, how to work out your capital gains tax. The ATO provides the following guidance. The first step is to determine your cost base. This is the purchase price of your crypto plus the cost related to acquiring or disposing of it. So your sale price minus your cost price equals your total capital gain or loss. If you make a gain, report the total amount under H18 current year capital gains label on your tax return. If you've had your crypto for more than 12 months, you may be eligible for that 50% discount, or establish a indexation factor you can apply against your crypto against your capital gain. If, however, you've owned crypto for less than 12 months, you must use the other method where you simply subtract your cost base from your sale price. So the final amount is reported at the 18A net capital gain label. Tax is then applied to your total assemblance income, which includes things like wage and interest income at the standard marginal rates. Another thing to keep in mind is the potential benefit of reporting a loss. So if you make a loss, work out your reduced cost base, your capital loss to reduce an existing capital gain or carry it forward to the future year. To report a net capital loss, enter 0 at the net capital label. This maybe sounds a little bit messy, but when you have the tax forms and stuff in front of you, it's pretty straightforward. I don't think you can make too many mistakes. Enter your total capital loss in 18V, net capital losses carried forward to the later income years label. Okay, jumping into income tax, there are many cases where crypto gains are seen as income and thus attract income tax, especially if the ATO views you as a trader and not an investor. So some examples: getting paid in cryptos, accepting crypto for payment of goods and services, airdrops, forging, sign up and referral bonuses, interest from lending, staking, DeFi, and masternodes, margin trading, ICOs, IEOs, forks, chain splits for investment purposes, and mining crypto and forging as a business. Another important tip are the tax-free events. So these include buying crypto, holding crypto, token and coin swaps, transferring crypto between your own wallets, buying goods and services under 10,000 Australian dollars if it's a personal use asset, and donating cryptos to registered charities. If you dabbled in the crypto market in 2020 to 2021, then you will likely pay one or both of these taxes depending on the type of activity you're involved in. We'll jump into detail of each tax type a little bit later because there's a lot of information for each individual tax. Here's a nice little graphic that shows you the different kinds of tax types and activities that fall into each tax type. All right, this part of the video, I will show you everything you need to know and do to actually calculate your crypto taxes using Koinly. So this is a very important part. It's a little bit out of order, in terms of this actual article, but chronologically for this video, I think it makes the most sense. So let's talk about a little bit about how to actually calculate your crypto taxes and different methods, because this isn't the only one. We want to give you all the options so you know what you could actually do. So who can help you calculate your crypto tax? Crypto tax reporting is fairly new and a road less traveled for most accountants. That doesn't mean the ATO is going to cut you any slack. Here are 4 ways you can tackle your crypto taxes and keep in your taxman's good books. We'll start with the easiest and most accurate method first. Use a crypto tax calculator like Koinly to create a report of crypto activity. Send that report to your accountant, complete your tax return. This is a super accurate, super easy way. And in this video, a bit later, I will show you exactly how to import different exchanges and how to get that report that you need. Okay, so another method, use a crypto tax calculator like Koinly to create a report of your crypto activity. Add the necessary data to your tax return and file it yourself. That's an option a lot of people go. So it's the same as the last one, except you file it yourself. So accurate and easy if you know what you're doing. And hopefully with these guides, it shouldn't be a problem. Get your accountant to work out your crypto activity by supplying transaction history, statements, etc. Let them work it out and file for yourself. This isn't, in our opinion, the most accurate way, and there's a lot of admin associated with it. Work out your activity yourself and file it yourself. Depending on how many transactions you have and how many different exchanges you have, this can also be a daunting task. So if you're going to go that route, best of luck to you. So using Koinly, how to calculate your Australian crypto tax, simply we're going to sync our wallets and exchanges. We're going to buy an annual plan, and we're going to download the tax report. And just keep in mind that the annual plan that you do buy can be included as a deduction in your tax reports. Okay, so I've made several videos on how to create a Koinly account, and I'll leave a much more detailed video in the top right corner about everything you need to know about Koinly and all that. But for this one, I want to basically just tell you how to set up your account, how to sync the 4 main Australian crypto exchanges that we see being used on Koinly, and then how to output the actual report. So sign up for a free account. You will go to koinly.io. I've already done that. I already have an account, so it'll just log me in, as you can see there. And then the most important part here is actually to go into your settings. If this loads, yep, okay, perfect. So we go into profile, we're gonna go into settings, and here is very important to have these correct. So select your base country, Australia, and the currency, Australian dollars. We talked about the most efficient cost basis method. The one that's easiest is FIFO, so make sure to select that one. We're gonna import in this video. We're gonna do 4 different exchanges. So we're gonna do CoinJar, Binance, Swift, and the independent reserve. So I'll get to that in a moment. After that, you're gonna see Koinly do some, number crunching, some calculations, and it's gonna output a report. I'll show you kind of an example of what it looks like. So this will actually give you a full summary of all your, capital gains, your income, all that stuff. And then at the end, we're gonna download the necessary report. For anyone that's interested, there's also the written version of what I'm going to talk to you about right now at the bottom of this article. Use cryptocurrency tax software to automate your reports. So I'm going to show you 4 different accounts. This just has a general breakdown. If you have other wallets and exchanges you want to import, you can do that yourself. It's very simple with our software. So I already have some from previous demo videos. So let's start with the most basic one, I guess, the simplest one, which is CoinJar. So we're going to go into add wallets. We're going to type in CoinJar. It's going to find it. There it is. We're going to click CoinJar. We're going to click the setup auto sync, and we're going to continue to CoinJar. And it's going to ask us to log in here. That's no problem. And the rest of the process will be done by Koinly. So for this account, I actually don't have many transactions. This is obviously for Australian users, but you should be able to see your wallet right here. You're probably going to have a lot more transactions, and it'll show you the different kind of coins you're using. Okay, the next exchange we're going to do is Binance. So once again, pretty straightforward. Find your wallet. Binance, I think it's there, but let me see if there's just a different one for Australia or if it's the same one. I believe it's the same. Yes, it is. So Binance, set up auto sync, and then it's going to ask for a API key and a API secret, and I'll show you where to get those. So heading over into Binance, we're going to go into the top right corner, and we're going to click our API management. Okay, once we are here, we're going to create a API. So we'll give it a name like Koinly, create API, and it's going to ask for a phone and email verification. So make sure to get both of those codes. Okay, so here we're going to get our API key. We're going to copy it, paste it back in here. We're going to go here, secret. We're going to take this as well, copy that, put it in here, and we're going to click secure import. And that's it. This process is now going to start. It might take a few minutes, but you should be able to see the Binance wallet with transactions after a little bit of time. One small note here is I made a Binance video that talks about how to also manually import CSV files. It's a little bit too much for the scope of this video, but I will leave it in the top right corner and the description. The next one we're going to import is going to be Swift. So we're going to go here, click that. Set up auto sync. So this one actually just requires an API key, and I'll show you where to find that. So on your Swift dashboard, we're going to go into profile, API keys. I understand. We're going to do the same thing, create a key. We'll also call it Koinly. Why not? I'm going to click next. Read only. That's all we care about. We do not need to give Koinly any other access besides the one to see the actual transaction, so it can easily calculate your cryptos. So here is the API key that it generated. We're going to go back into Koinly. We're going to type it in here, and we're going to click secure import, and that is it. So that's 3 out of our 4 wallets that we've imported. Okay, the last wallet, which I can't fully show you the process, but it's very similar to Binance, and if you understand that, you should have no problem with this one. So in the independent reserve, same as before, we're going to find the wallet, click set up auto sync, and it's going to ask for an API key and a API secret. So my account right now on the website is still being verified, but somewhere in the settings you will be able to find these 2 pieces of information similar to Binance. You're going to add them. So for me, I'm just going to put something generic like 1 2 3 4 5 3 4 whatever, and we're going to click secure import, and it's going to show us the wallet. So obviously those are just demo values, numbers, keys. You should have better ones or the real ones with your account. Alright, so once all of these wallets have been imported, we're going to go into our tax reports, and we're going to make sure to select this year 20 to 21. It's going to ask, it might give you some warnings here. This is because for me, some of these accounts, like I said, the API key, made no sense. It wasn't the correct one, but it's going to give you a summary of your capital gains, P&L, your futures from your gains from futures, your income, cost basis, etc. And then this is the part that you are probably most interested in, and kind of the best part of Koinly, how easily it outputs the necessary tax report. So as mentioned in our article, select and download your report. Koinly offers many downloadable tax reports for Australia. The report you need to download is called the Complete Tax Report. It contains everything you need to report to the ATO. So let's go back into our reports. We already covered all this stuff. So we're going to go down here and we're going to click Complete Tax Report and download it. And here is an example of what this report looks like. As you can see, it says everything from your number of disposals, proceeds from sales, acquisition costs, and so on. And this is the data we'll talk about later. This is the data you input into your actual tax return. So jumping into the actual activity, the actual part where you report your crypto after you have calculated it, your crypto taxes. So how to report your crypto tax activity. The ATO wants to know about your crypto activities in terms of income and capital gains. You'll need to declare both in your annual tax return in the same way you report your regular income, loss, and gain. So the tax deadline, very, very important date. Write this down. The Australian tax year runs from July 1st till June 30th the following year. So if you're lodging your own tax return for that date, it needs to be filed by October 31st, 2021. If you're going through an accountant, you have actually a little bit more time, and it's due on March 31st, 2022. Okay, jumping into the nitty gritty, filing with MyTax. Once you or your accountant has calculated your crypto tax, as we said, we talked about Koinly and how to do that with Koinly earlier in the video. The easiest way to file your taxes is online using MyTax. I'll just show you what that website looks like. I'm sure you've seen it, but just for your reference anyways, this is the official MyGov website. So anyways, available from the MyGov dashboard. So this is what the dashboard looks like once you log in. So from your MyGov dashboard, select ATO. MyTax, you need to have previously linked your ATO profile to MyGov. So here are the actual steps to doing that if you haven't done that already. From your MyTax dashboard, select tax from the top navigation. So right here you'll see an upcoming lodgements as well as your previous lodgements and refunds. Select this year's income return. So follow steps 1 and 2 to enter and update your personal contact details and those of your banks and any other financial institutions. Here, very important step, you had Australian interest or Australian income or losses from investments or property, and then select the one that says capital gains or losses that are not from a managed fund. Okay, before you enter your figures for the year, you need to personalize your return at step 3. Here you'll make selections that may apply to include them in your tax return. So see more on making the correct selections here. So how to personalize your tax return, the article from the ATO. Be sure to select Australian interest or other Australian income or losses from investments or property, and from its drop-down options, select capital gains tax related items. This will apply to most crypto users who are seen as investors by the ATO. If your crypto activity is at a business level, you're seen as a trader and need to make a selection under sole trader or business income or losses, partnership, or trust distributions. Don't forget to select the deductions you want to claim, including using Koinly as your tax software to help you with your taxes. So you can use Koinly and then include it as a one of your deductions in your claim, which counts towards costs of managing your tax affairs. You have deductions you want to claim, gifts, donations, interest, dividends, and cost of managing your tax affairs. So that last line, very important, and it can basically include your Koinly subscription into that. So anyways, once you personalize your return, it's on to step 4, prepare your return. If you made a gain, report the total amount under H18 current year capital gains label on your tax return. If you've had your crypto for more than 12 months, we said it many times. I think it's very important to keep saying it, to be honest, because some people do forget. You are eligible for a 50% discount, or establish what a indexation factor you can apply against your capital gains. If you've owned for less, you must use the other method. We've said this before. I've already said all this stuff in the other part of the video. If you make a loss, work out your reduced cost base, your capital loss, to reduce an existing capital gain or carry it forward into the future year. So there's another really great tip for you. You can actually use your potential, crypto losses as tax deductions in the current year or in the following year. And to report a capital loss, enter 0 at the net capital gain label. Okay, let's talk about filing with Printable Forms, which will also be available for you here. You may also have the option of declaring your crypto activity on paper and returning the forms by mail. You'll need 2 forms, one for income and one for capital gains, depending on obviously which will be applying to you. So crypto income is declared on question 2 of this return, tax return for individuals 2020. Crypto capital gains, you'll need to select yes on question 1 of the taxpayer's declaration on your tax return for individuals 2020. Wow, mouthful, I know, form. So this is what it looks like. Here's the place where you select yes. Next, complete question 18 of the individual tax return instruction supplement 2020, tax return for individuals, supplementary section 2020. Wow, this is a mouthful, trust me guys, this is a tough one to get through. If you made a gain, report the total amount under H18 current year capital gains label on your tax return. If you made a loss, enter your capital loss in 18V net capital losses carried forward to later income years label. And the final amount is reported at 18A net capital gains label. And here are just these sections cut out to show you exactly where these things are. And as I said earlier, here you can download these 2 forms. Okay, let's talk about giving you an actual understanding of what capital gains tax examples look like. I don't really want to go super into detail. I don't want this to be a 2-hour video, so I will break down some of these sections into hopefully a few lines. So capital gains tax is the type of tax most crypto investors face. This that applies in Australia and many other countries, including Canada, US, UK. So capital gains CGT events occur when you dispose of your cryptocurrency. That sentence is a very important one. If you remember that sentence, it'll give you a broad understanding of how this actually works. So in other words, as an investor, if you get rid of your crypto, whether you sold it, you swapped it, gave it away, or exchanged it for an item, paid with it, let's say, and that item is not for personal use. So the formula for capital gain is capital gain equals selling price minus buying price minus the fees. I will leave some examples here of transactions. You can pause the video, read this a little bit more. I don't want to spend a crazy amount of time reading all this because I think it'll just also get too boring. So here are some examples of capital gains tax activities. So selling your crypto for fiat for, I don't know, let's say Australian dollars, trading or exchanging with crypto. Remember, when you're exchanging from one crypto to another, you're technically selling it and then buying back another crypto. So that's maybe what doesn't come to mind naturally when you trade these items, but there's actually several different steps that happen, and one of them is selling that crypto, which is a taxable event. Gifting cryptos to friends and family. This is the unfortunate part. In the US, gifting is actually not considered a taxable action. In Australia, it unfortunately is. So it's a taxable event, and you'll need to pay CGT on the disposal of your crypto. And even for this one, every one of these actually has a nice little example. If you want to pause the video and give yourself a real world example, I'll let you do that on your own time. So receiving crypto as a gift, trading with stable coins. I think this is one worth talking a bit more about. A stable coin like TrueUSD or Australia's AUDT is simply a class of crypto that offers price stability. That's because stable coins are backed by a reserve asset, usually a stable fiat currency like USD or AUD. Now, part of you might be thinking, wow, this is just a currency. This is treated like any other currency. But in reality, it's just a crypto. So there's no real major exceptions here between this stable coin and other cryptos. Okay, moving along. Margin trading, this is probably something that I would say a very small minority of the audience will actually need, but if you are involved in borrowing funds from an exchange to carry out trades and then repaying, the loan later, there are usually some interest involved in this as well. So I'll let you read up a little bit more on that. Participating in a ICO or IEO. I don't really know how many people do a lot of ICOs, but some more information on, initial coin offerings. If you're buying a coin that just is brand new and you're exchanging a certain amount of, let's say, Ethereum for it, keep that in mind. That's also a capital gains tax event. Forks and chains, I'll leave that here. This is an interesting one. Paying for goods and services not intended for personal use and or priced over 10,000 Australian dollars or paid with, long held crypto. So good paid for in crypto attract capital gains tax as well. The item value is over 10,000 Australian dollars. Goods are bought for business use or as an investment. Goods are bought with crypto held for a long period of time and or initially bought for investment purposes. And here's a real world example of what this type of transaction might look like. Moving right along, mining or forging as a hobby miner or forger. This is a very interesting one because it's a bit of a gray area in terms of Australian crypto tax laws. So a hobby miner or forger is someone who participates in cryptocurrency mining, forging as an interest or pastime and not in a business-like manner seeking commercial profits. Their investment in mining will be relatively insignificant, so just like, a personal computer, let's say, a small-scale operation at home, and the intention to accumulate the rewarded coin rather than sell immediately for profit. Okay, moving along to another very important section. Let's talk about tax-free examples. Believe it or not every aspect of crypto trading is taxed. In some cases, you might not have to pay any tax at all. Tax-free crypto events, including buying crypto, token and coin swaps, and moving crypto between wallets you own. In certain cases, using crypto to buy items for personal use is also tax-free. So let's do a quick breakdown. Like I said, I don't want to spend a crazy amount of time on these sections because the video will become too long. So paying for personal stuff less than 10,000 Australian dollars. If you notice, this is a little bit different than this one. This was items more than 10,000 Australian dollars not intended for personal use. So this is the inverse of that. And here's a nice little simplified personal use asset, I guess, diagram picture. I'm going to buy crypto. I'm going to buy some crypto now to get a discount. So this would be, crypto in a tax exempt way. I'll use my Ethereum I've had for 2 years to get the discount. This crypto is not exempt. And this last one is my XLM I buy every 14 days will be perfect to get the discount. So another tax-free purchase, let's say. So buying crypto obviously is not considered a taxable action. Buy or hold. So if your strategy is to simply buy and hold your crypto, then you don't need to pay tax on your cryptos you hold, even if the value of your portfolio increases. So the longer you hold and not sell, that just means more time for you not have to pay capital gains tax. So transferring crypto between wallets your own, that's a pretty straightforward one, but maybe you thought for some reason transferring between accounts you have to pay taxes. Token address change, mainnet launch. This one probably not going to apply to many people, but I'll leave it here if you like to read more about it. And donating crypto, if you're donating to charity. So in Australia, crypto donations work the same as regular donations. They're tax deductible if you're donating to charity, to a registered charity. Keep that in mind. You can claim the donated amount calculated as the price of the cryptocurrency at the time you donated as a potential deduction on your tax return. And lastly, let's talk about different income type examples. So cryptocurrency interest income, staking income, mining, forging, airdrops, and hard forks are taxed as income by the ATO. Crypto users engaged in trading rather than investing will also be taxed under income tax and not CGT. So income tax is charged on the fair, this is a really good sentence. Income tax is charged on a fair market value of the received coins. So for an example of this, if you mined 0.05 Bitcoin worth $300, then you will have to pay income on that 300. If you later sell that Bitcoin for, let's say, $400, then you will have to pay the additional capital gains tax on that $100 profit. So here's a breakdown of most cryptocurrency scenarios where income tax applies. Moving into the future, some people potentially are getting paid in crypto, so getting paid in Bitcoins is considered income tax. Sign up and referral bonuses, mining and forging crypto, airdrops. This is a really interesting one. The ATO has stated that any airdrops received from an established token are considered ordinary income at the fair market value of the tokens on the date you receive them. So the money value of an established token received through an airdrop is ordinary income of the recipient at the time it is derived. That is the official statement from the ATO. Interest from DeFi, lending, staking, and master nodes. Very important. I think very few people probably watching this video will be involved in that, but it's good to know. Futures contracts, option trading with crypto are also considered capital gains or income tax. So in future trading, you're actually not buying or selling any crypto. Instead, you are speculating on the rise or fall of the price of crypto asset in the future. When the future arrives, you will either make a profit or a loss, a P&L. There is no guidance from the ATO on how this P&L should be taxed, but there are two possible tax categories this will fall into. Note, if you are using Koinly to calculate your taxes, then you control how the P&L is taxed on the settings page. Moving along, something that should be very apparent at this point, especially based on the income example we talked about earlier. Do I have to pay capital gains tax if I already paid income tax? The answer is yes. We talked about this earlier. If you are, let's say, mined $300 worth of Bitcoin, that is income. If you then take that $300 and sell it later for $400, that is a $100 profit, which is considered capital gains, a capital gains taxable event. So please keep that in mind. Let's talk about another topic that's very important, and I made an entirely separate video on this. I'll leave it in the top right corner. It's how to minimize your tax liability. So number one thing you could do, deducting cryptocurrency losses and trading fees. First step towards minimizing your tax liability is figuring out what losses and expenses you can offset against your taxable income. In order to do this, you'll need to figure out whether you'll be classified as someone that holds crypto as an investment, or whether you're carrying on a crypto trading business. Crypto trading or cryptocurrency used in business. In this case, you can completely offset your crypto losses against your income as long as you pass the non-commercial losses rule, which I will leave on screen here just if you want to read it. It's a bit longer. Obviously, there's a lot of different exceptions and all that kind of stuff. Moving along. Also keep in mind that the crypto you own at the end of the year is trading stock, and you have to declare its value as a part of your assessable income. Interestingly, you can declare this either at cost or market value, which gives you some flexibility in terms of your tax planning. Okay, we talked about this a little bit earlier. Buying crypto only to pay for something else, personal asset use. You can get an exception for capital gains tax if you hold cryptocurrency as a personal asset. If you purchase no more than 10,000 Australian dollars of your cryptocurrency to directly buy something else with crypto, that too over a short period of time, you are eligible for this exception. I don't want to go too much into this because we really talked about this in the past. I'll pause you can pause the video and read a bit more about it. In the unfortunate scenario that you get hacked or you get stolen cryptocurrency, so if your cryptocurrency gets stolen or if you lose your private key, you can claim a capital loss. However, in order to claim this loss, you will need to be able to provide certain evidence, and this might be a bit harder to come by, but the wallet address that the key belongs to, when you acquired the key and when you lost it, the cost of acquiring the stolen/lost cryptocurrency, the fact that the wallet was controlled by you, the amount of crypto at the time that you lost the key that you possess, the hardware where the wallet is stored, and the transactions to the wallet from an exchange which is linked to your identity. Deducting cryptocurrency mining expenses. This depends on whether you undertake mining as a hobby or business. This can be done by looking through the "Are you in a business" section of the ATO website. So there's even a nice little video here by the ATO. Mining as a business. Any expense related to mining, including electricity, which is a massive expense for some people, can be deducted from your income to find your net taxable income. Mining as a hobby. If you've undertaken crypto mining as a hobby, the mined Bitcoin constitutes holding a CGT asset, and you would be subject to capital gains on the disposal of that crypto. Another thing just want to point out here is, if eligible, you may also be able to apply for a $20,000 instant asset write-off to the cost of your capital assets. So something to maybe look into. Maybe it won't apply to as many people. It looks like they're currently, the page is down, but if you're interested, look into this section more. If there's something you can't find, also, I will link the ATO official forums, the knowledge base. There's a lot of really smart people having some really good discussions about crypto taxes and kind of helping the ATO establish the fundamental laws and guidelines surrounding crypto. Alrighty, that is the end of this video. If you enjoyed it, please consider dropping a like. It took a lot of time and effort, and a lot of people were actually involved in this. If you're interested in more crypto content, make sure to hit the subscribe button. All the links to everything I talked about today are down below. I also have the official Koinly support website down below, and the ATO website, where you can have further discussions, and if you have more specific questions, this is a fantastic place to go. You can obviously also leave comments down below if you'd like. But yeah, that is the end of this video, and I'll see you next time. Peace.